Taiwan index that is actually trading slight bit on the negative territory, down 5 points as of now.
It's a tight working visit, which will be a little more than 24 hours.
The markets fell a lot, but we also saw a strong recovery which came through.
January inflation has come in at 4.3%.
Number one was the product premiumization, which we have been working on, trying to fetch better prices from the market.
US imposed 25% tariffs yesterday on steel and aluminium.
So 23,085 is where we're at. The Nifty Bank is absolutely flat.
The tariff situation is still fluid. We don't know exactly what's going to happen.
After 6 days of losses, the markets have rebounded. In fact, the rebound began yesterday only.
We were very positively surprised by the amount of interest and the fund flows.
I think there'll be a lot of pressure, especially on the goods which are being exported from the US into India.
For the Nifty, we were comfortably above 23,200. Compared to that, now we're down to 23,150.
Well, that is the day so far. It has been not a very eventful kind of a session, but one constant thing has been the markets come off. It was trading with gains, decent kind of gains in the morning. It was looking like there was finally that bounce we were talking about, but nothing very much on the Nifty at this point in time. This is Closing Bell, last hour coming up. I'm Prashant. With me, my colleague Rima. Rima, hi.
Hi. In that sense, a bit disappointing, right? Because the Nifty has given up about 170, 180 points from the day's high. The day's high today was 23,235. The Nifty Bank is now in the red. At one point of time, just before 12 o'clock, the Nifty Bank was up 350 points, and now it's down 170 points. So even in the mid-cap and small-cap index is also now, in fact, in the red. These were indices up 1.5%, 2%. The advanced decline ratio, also the gap between the two was quite wide when we began the show, but now it's completely evened out.
It's evened out, and it's almost like a holding pattern ahead of that meeting, right? Trump and Modi. Although at a high level, if you really wonder, even if there are reciprocal tariffs, etc., is it for the market? Does it really mean very much? Because Neelkant, for example, told us total estimate is about $7-8 billion, right? And it'll be lower than that. In the larger scheme of things, it's not very meaningful. And from a listed, then you got to go down and look at listed companies which are impacted, etc. So, but anyway, I mean, you got. I think that may be just also at the margin 20% of the reason, not the majority of the reason. This is just been weakness all around because of other reasons, as Amish was telling us, of BOFA in the morning, or so many others who've been on the programs over the last few sessions. I just want to quickly put out the levels because that's all at this point we can do. So the initial hurdle is the 23,284 level for the Nifty 50, which is the 20-day moving average. I looked at where we got to. I think we fell short by about 35 points. Didn't quite get to the 20-day. And then, I mean, the selling has already appeared. Bank Nifty got to yesterday's high and then has sold off. Almost 10 points short of yesterday's high, and then it has sold off. For the Nifty Bank, the resistance is 49,955. So that's the Nifty Bank first resistance. Broader markets have also cooled off, as Rima was pointing out. And of course, that meeting tonight is going to be in focus. I don't know if you have that timeline, that graphic with the timeline of Prime Minister Modi and Trump's meeting. If we do, we'll put that up in a bit from now. The joint press conference is going to be at 4 o'clock in the morning, our time. There you go. Rima, that's the graphic we're talking about. I think 2:30 a.m., Prime Minister Modi meets President Trump. 2:35, we have a bilateral meeting, which begins 3:40 in the morning, our time, essentially. Joint press conference, I think, will be very closely watched. Both leaders at the podium. And there'll be, I guess, opportunity for questions for the press present there. And of course, 4:10 is going to be Trump hosts state dinner for Prime Minister Modi. That's, of course, off press. So that's the schedule. So, I mean, that's all going to be tonight for us. And we'll wake up to this unless you plan to stay awake and track the proceedings, Rima.
Well, it's going to be trade, energy, immigration, lots on the agenda between the bilateral talks between the two. And even from individual stock point of view, right? Say for a Bharti, will Starlink, make its way into the conversation, for instance, or a Tesla factory for, automobile companies. So there's lots which will be of interest from a stock market point of view. So back home, a quick word on how the large caps are faring right now. The Nifty and the the sensex, by the way, are now in the red. Just dipped into the red as we speak and begin the show. Adani Enterprises, top loser, down 4.5%. Hero MotoCorp, TVS Motors have cracked 1.5%. IT, sectorally, IT is one of the worst performing indices. Infosys, TCS, Wipro, all struggling. And in the large cap banking space, it's State Bank of India, HDFC Bank, ICICI Bank. These are the stocks where, all the morning gains have been given up and the stocks are under pressure. So how should you position yourself in the last hour of trade? Mitesh is now with us for a few closing strategies. Mitesh, would you be disappointed considering that we've had 6 days of weakness on the trot? It looked like we were a bit oversold. We were due for a bounce, but that bounce is not sustained.
Good afternoon, Neema. Disappointment would be an understatement. I think today I thought there's some kind of strong reversal happening. And we again saw the market sell off, and the long positions were stopped out around, on the index, roughly around 23,125, 150 zones. Once we started trading below 23,150, I think you always knew that there would be another selling round which could happen in the markets, and that is what we are witnessing. But I think, we've had one good thing, that was the bounce back from 22,800. So maybe we'll go and retest that. That still remains the key pivot area. And on the upside, I was hoping for a closing about 23,150, even if we came off slightly from the highs. If that doesn't happen, then I think, we're back to this 23,150 or 22,800 kind of a range. And therefore, we trade with more of stocks for specific buyers. I have Bajaj Finserv as a stock on the buy call, buy side trade. Keep a stop at about 1813. Look for a target of around 1900, and Coforge is on the negative side or sell side, which I would recommend selling with a stop about 79.60 and a target of around 7600.
SBI Cards, any view, Mitesh?
Very, very positive bias over there. SBI Cards, something which I believe has turned the corner on the long-term charts as well. So while we had a trading call today with a target of 885, my bigger target over here for the stock is one about 915, 920 to about 935, which were the highs which the stock made in May of 23, and then before that in July of 22. And I suspect we can eventually even cross that and head towards levels of 1025. So very positive on the medium to long term charts. In fact, every declines I would want to be buyer over here.
Bajaj Finance, is the jury still out of that 3-4 year breakout, or it's happened?
No, I think it's happened, Prashant. I believe that, that's another stock which is heading towards, and, Bajaj, Kotak, SBI Cards, all these stocks which haven't done well in the last 3-4 years are now showing signs of extreme, positive indicator setup on the long-term chart. So Bajaj Finance to me is a very, very strong chart on the long-term basis. Though after, in the last 2 months, it's rallied from 6,800 to about 8,500. So you might see a few weeks of consolidation. But barring that, I think the stock, I would, now believe that it will be very difficult for the stock to break below 7,900, 7,950 zones again. So anything close to about 8,100, 8,050, I think is my buying zone. And I would slowly accumulate into this one.
Okay, let's talk about SBI Cards in greater detail. The stock, by the way, has had a good run this year. Since the beginning of this year, the stock is up 30%, and it's a fresh 52-week high on the stock. And what's added to the strength today is the Macquarie upgrade. Abhishek is here with the details.
Well, Rima, in a couple of months, over the last few months, there are many upgrades that have come in for SBI Card, or over the last few weeks, to be more precise. So, Macquarie is another brokerage which has upgraded SBI Card. They have upgraded the rating to outperform from neutral that they had earlier. The target price has been increased to rupees 1,000 per share from earlier target price of rupees 750 per share. Their channel check suggests that credit card slippages are now plateauing. So, they believe that vintage delinquency as per CIBIL data in credit card has been consistently coming down. So they expect the credit cost of SBI Card to start declining materially over the next 2 quarters or in next 2 quarters. So they have cut their earning estimate between 13% to 15% over the next 2 years, that is FY25 to FY27, driven by slower loan growth as well as NII and fees. However, they say that they have reduced the sustainable credit cost as assumptions as well, resulting in sustainable ROA, that is return on asset, by 30 basis point to about 4.5%. Back to you.
Okay, thank you very much for that. Sudeep Bandopadhyay, Group Chairman of at IndiTrade Capital, is now with us on the show. Sudeep, is SBI Cards a preferred stock for you?
I think SBI Cards have turned the corner quite some time back. Last couple of months, it has been continuously going up, and the upgrades have started coming now. Very clearly, the slippages have kind of plateaued, and because of that, I think the credit cost is coming down. And the way the company is positioned, I think there is significant upward trajectory of the business is definitely possible. The biggest challenge was the slippages, biggest challenge was the credit cost. Now, if these things get controlled, obviously, I think there is a long runway for this company. So yes, while this has not done too well in the recent past, I think the way forward looks good.
I was asking Bitesh about Bajaj Finance. Sudeep, hi, good afternoon. Any thoughts? Bajaj Finance?
Well, I think it's a fantastic company. We always have liked it. I think the way they have steered the business, the way they have moved and pivoted the business in the right direction is quite commendable. The valuation has moved up quite a bit in the recent past, but I think a lot of upside is still there. And remember, the credit cycle is changing. Interest rates are coming down. So for efficiently managed finance companies will benefit in this phase when interest rate starts coming down. So I'm absolutely sure Bajaj Finance will continue to perform and outperform its peer group. So definitely somebody with a slightly long-term view can look at Bajaj Finance even at current levels.
Bank, Sudeep, again, another name, right? Suresh Ganpati, who was upgraded Macquarie, also points out in the case of Kotak that, upgraded SBI Cards, points out in the case of Kotak that it's got the strongest growth in earnings expected for 20%. Again, something like a Bajaj Finance hasn't done anything for about 5 years now in the case of Kotak.
Kotak does look good. In fact, yesterday's development where RBI has allowed them once again to acquire new customers, issue credit cards is definitely a significant positive for Kotak Mahindra Bank because when there is a significant challenge in terms of deposit mobilization, liability is the focus for pretty much all the banks. If you can't get credit cards, if you can't get new customers through digital means, it definitely is a significant handicap. Now that handicap has been removed, so I'm sure the bank will do well. And yes, as far as valuations are concerned, it hasn't done anything for quite some time. So yes, there is a valuation pickup opportunity as well. But if I have to pick one bank, I'll still go back to SBI. I think that's much safer a bank to pick at current levels. And I believe the future there is also quite bright.
It's turning out to be a full conversation only about financials because the next one is also Muthoot Finance that we are talking about. Abhishek is here. Stocks up 5%. I think CLSA or someone came out with an upgrade 2 days back on the sector. Actually, Manappuram and Muthoot, and numbers from Muthoot are looking strong. Abhishek, take it away.
Well, Prashant, when gold finances are doing well, worry about the economy, not the lenders, because gold is the last resort with respect to getting financing from. So, Muthoot Finance gold portfolio has shown incredibly well, 37-quarter high with respect to AUM growth over there. However, the subsidiaries' performance are a little bit weak. So, for the entire company on a standalone basis, the AUM growth is about 37% YOY and 8% quarter-on-quarter. It's at 37-quarter high with respect to YOY loan growth over here. Gold AUM, that's grown by 34.3% YOY and about close to 8% sequentially. The net interest margin has expanded for them to 11.6% versus close to 10.9% in the same quarter last year and about 11.54% in the previous quarter. Now, Home Finance subsidiary, the AUM growth is really strong over here, more than 52% YOY and about 11% quarter-on-quarter. However, the net interest margin has declined sharply to 5% versus 7.23% in the same quarter last year and about 6.5% in the previous quarter. Belstar MFI, the subsidiary which is in microfinance segment, over there the AUM declined by 1.5% YOY and about 9.5% sequentially. The asset quality has improved to 2.91% over there versus 3.5% in the previous quarter. With respect to the PNL, both the NI and PAT is a beat on our poll. Back to you.
We build a lot of operational efficiency into these branch network that we have, because it's a significant branch network, over 7,000 branches. So we have always ensured that the per branch productivity is increased. And this time we are at a record 19.15 crores of gold loan AUM per branch, which was about 14 crores. So we added almost 5 crores of productivity in this last 9 months itself. So this is a huge operational efficiency that we are building up. On the cost of funds, yes, currently we are about approximately about 9%.
Sudeep, any thoughts on Muthoot Finance and Honasa? That's been the star today. I remember Q2 were a very, very disappointing set of numbers. The company reported a loss. In Q3, they've bounced back. Growth is still tepid, at least on the top line, but it's a much better showing. IFL has upgraded, even Kotak Institutional Equities has upgraded Honasa Consumer. So first, if you have a view on Muthoot Finance after the 6% up move, and then come in on Honasa Consumer.
Well, I think as far as Muthoot is concerned, we have been positive on the gold loan companies for quite some time, and I think that's getting played out now. I still believe that the gold loan business per se will continue to do very well in the near future as well. The challenge as far as both these two companies, Muthoot Finance as well as Manappuram, is in their microfinance subsidiaries. And I think there is significant pressure, and it's been talked about quite widely. The asset quality pressure in microfinance is real and is going to continue for some more time. We'll have to see how that plays out. But otherwise, I think both Muthoot and Manappuram does look good. Valuation-wise, I think Manappuram probably will be my preference. And there's some corporate action being talked about in Manappuram Finance. If that happens, I think there is value unlocking opportunity for shareholders. So maybe I'll look at Manappuram Finance at this juncture. As far as Honasa Consumer is concerned, yes, this numbers for Q3 were much better than Q2 numbers, but there are still a lot of red flags, I would say. The flagship brand Mamaearth is still not growing, and significant amount of money they're going to spend on advertisement and brand promotion in the coming quarter as well, and that has been stated by the company itself. So I'll be a little careful. Let's see how things pan out going forward. I personally don't believe that they have come out of the challenges which they had in the last quarter. Things have improved a bit, but I'll wait and watch.
Put up PN Gadgil if we can. Stocks up 17%, 620 on PN Gadgil. And that's the jeweler. And then there's Premier Energy, which is up 7.5%. Again, both kind of beaten down quite a bit and coming up strongly. Do you have a view on either of these, Sudeep?
I do, Prashant. PN Gadgil, of course, because jewelry companies have been doing well. In fact, in between, when Kalyan started falling, pretty much all these companies got beaten down. There is a challenge with companies like PN Gadgil. They are a very concentrated business. It's a Pune, predominantly 60% plus business comes from the Pune region. They need to expand. They need to move to other geographies. And if you consider the valuation, it's not cheap. So if I have to buy a jewelry company, I'll rather go to the pan-India players. Titan, of course, has been my favorite for a very, very long time. If I have to pick one more stock, I'll probably go and pick Kalyan. I think the model is good. The rumors and all these issues, for a minute, if we leave aside, I think Kalyan would be my pick after that. I will not go to these regional players at this stage because, they need to prove themselves outside their region. It's still a long way to go.
For now, at least, PN Gadgil is up 10%. The street likes the EBITDA performance in the quarter gone by. 33% jump in the company's EBITDA. And today, Senco Gold comes out with their Q3 numbers. Sudeep, thank you very much for that. Now, moving on to another important story that we've picked up from sources is that RBI has met select NBFCs to understand their pain points and the key demands. Ritu is here with more details on this.
Well, yes, Reema, this is the very first meeting that Governor Sanjay Malhotra has held with the NBFC industry. Today, apart from him, it was the deputy governors and the top brass at RBI that held a meeting with select, NBFCs, largely in the upper layer, and those included the likes of Shriram Finance, Mahindra Finance, Cholamandalam, Bajaj, PFC, RAC, and others. So there were about 20 to 25 MDs and CEOs from these companies, and apart from this, we understand there was also representation from industry bodies like MFIN, Sadhan and FIDC. Now, largely the agenda of the meeting was for RBI to get feedback from the industry on various issues that impact them. So we've been given to understand that the NBFCs that were part of today's meeting raised particularly issues when it comes to liquidity, the need for easier liquidity and the need for refinance window, to be provided for NBFC, which has been a long-standing demand. A handful of large NBFCs, again, raised their concerns about the lack of, liquidity and why the RBI should consider allowing them to have public deposits. Apart from this, harmonization of guidelines were among some of the areas that were discussed. We've also been given to understand that MFIN and Southern in particular voiced concerns about what Karnataka state government has said about, tightening the rules when it comes to collections by MFIs to avoid any kind of harassment. That is something the industry seemed worried about, so that there's no overreach from the government, and that is something RBI has assured them that it will be looking into. Largely, it was very much a one-sided conversation, as we heard from many of the CEOs present there, with the NBFCs voicing their concerns and putting forward their demands. Not much was revealed as far as the RBI's own thinking is concerned.
Okay, all right, Ritu, thank you very much for that. Appreciate it very much. Sudeep, thank you for joining us here on this edition of Closing Bell. Appreciate your time. We'll take a quick commercial break here. Alok Agarwal of Alchemy Capital Management on the other side. Market conversation continues. Okay, Alok Agarwal is joining us now. He's head of Quant and fund manager at Alchemy Capital Management. Alok, good to have you on the program. Thanks very much for joining us. Prashant this side. Alok, talk to us and our viewers a little bit about, what you do at Alchemy, a little bit of sort of intro, if you don't mind. On the Quant side, what kind of work do you guys do? And, it will be helpful. And then we can launch into your views.
Absolutely, Prashant. Quant is one term which has many interpretations in our markets. In the simplest way, the way I put it is, when you have a rule-based investing, when the outcomes of the rules decide what goes in and goes out of the portfolio, that's a quant strategy. It could be as simple as just a single line rule, or it could be a complex set of rules having multiple factors and adapting to the market cycles that we do. So that can be a big range, but as long as it's objective and rules driven, it's a quant strategy because mathematical outputs decide what is to be done. It has nothing to do with the short-term trades and a lot of high-frequency trades. A lot of misinterpretation happens around that. That's not what we do. It's purely an investment method, which is decided more on the rules side. Yes, ours is a far more complex method, which tries to adapt to the changing market cycles. That's what makes it quite unique.
In a simple way, can you simplify, just to give us a sense, what kind of rules do you have? I mean,
let's put this way, Prashant, ultimately investment decisions boil down to objective decision making and some subjective data analysis. Objective data revolves around the quality of earnings, the growth of earnings, the balance sheet strength, and some historical numbers. Apart from that, some of the estimates as well, as long as what kind of growth rates are expected in those sectors and companies. So a complex set of rules interacting with each one of them is the set of mathematical rules. But as they say, I often use this example of a coffee machine. A coffee machine can produce, same coffee day in, day out, but it cannot taste or smell its own coffee. There are certain aspects of investment decisions, the subjective data. You need some involvement of human beings into that because mathematics cannot solve it. That's what we believe, that some element of quality ratings on the companies and sectoral sides that needs a human touch. With that, the combination of this complex set of rules. And
but these rules are, sorry, just to go on one question more and then we'll get into markets and your view. This is all earnings related, right? It's not momentum, price action. The rules are not based on breakouts, etc. This is quality of earnings, etc. What you're talking about, right?
Each one of them is equally important. So quality of earnings is important. So ultimately, the test of the funds comes in terms of returns as well. So the price movement factors also play a role, but they only play a role. They do not dominate the whole decision making.
Okay, so Alok, let's make it simpler for our viewers then. What is the output that your fund has generated, taking into account the inputs that you are feeding into it qualitatively? So what's the investment advice that your funds, your models are throwing up for the near term and even for the medium term?
So let me put it this way. Broadly, there are three set of factors that we look at. It's quality set of factors, the growth set of factors, and the price action set of factors. Once you evaluate a company in all these three factors, which factor is more important and what will be the weightage of that factor is decided by the kind of strength area that the market is in. A stronger market is almost like slog overs in a cricket match, wherein you need to hit those runs. And that's where the price-driven actions play a far more important role. But markets like the current ones, where there is far more nervousness, far more corrections, and the market's not too receptive of very, very strong movements, and that's where the qualitative side of earnings and balance sheet strengths, they start having a much larger role to play in the investment decision. So we are currently more on the slightly weaker territory of the markets, trying to bounce back, but still not in a strong mode currently.
So you anticipate more weakness and therefore are you taking cash calls or are there opportunities where there is relative safety? How are you positioning your portfolio and the advice for your clients? What's the advice to your clients?
The advice to the clients is that, these kind of times are the times to actually go ahead and increase allocations to equities. There are certain strange data points. This is the 5th straight month of fall in Nifty 50 as well as Nifty 500. This is the first time it has happened since November 1996. It did not happen during dot-com bubble burst. It did not happen during 2008 crisis. It did not happen during COVID. So yes, the markets were heated up a bit. There was a slowdown in both corporate earnings as well as on the economy side. But sometimes from one end of irrationality, we tend to move towards the other end. Some of those negativities, some of those negative points are possibly little more than the price action is already factoring in. So there's a very big chance of a bounce back happening from here on. But the distance from thereafter will be decided by the ongoing growth in the economy as well as on the corporate earnings, both of which at least there are early signs of bounce back seen in both the economy as well as the corporate earnings.
So which means translates into what? I mean, quantifying it into the index, bounce back from around these levels, a meaningful bounce to take us where? I mean, rough.
So it looks like the major part of the price correction is possibly done with. There are a lot of signs of capitulation also over the last few days. And that the proactive nature of the regulator, especially on the monetary side, that's the RBI, over the last 2 weeks, the way they have been proactively intervening and giving signals to the market is they are ready, they are doing everything that's required to take care of liquidity and the growth sides. And that's actually quite positive. To come out with nearly 1.5 trillion rupees of liquidity answer to that little over 3 trillion rupees of negative liquidity just ahead of budget, then cutting rates, then increasing the OMOs and VRR auctions. These are very, very strong statements to make without those announcements, but very, very strong steps coming forward. At a time when the fiscal consolidation is happening at the country level, ensuring that the balance sheet at the macro level is quite good and quite shock-proof in an environment in the world where a lot of news keeps coming.
So give us a few ideas where we should see this maximum bounce playing out. The majority of this bounce playing out. Where should one look for?
So, Prashant, if we look carefully, India was running primarily on the capex-driven growth in the last few years. If you look at the budget side as well, from FY16 to 20, a 7.5% annual growth translated to next 4 years annual growth of 30%. But from FY24-26 is just 8.5% growth. That shift from a capex-driven number to primarily a discretionary spending kind of number is quite visible. So the areas like consumption, especially on the discretionary side, are the ones that are leading the growth and having a far more visibility of a much more higher growth for a longer period of time.
Just a quick, short answer here, Alok. You're saying you're advising your clients to increase allocation to Indian equities at the current juncture. Go all in right now. This is as low as it gets for the near term, or just over the medium term to now deploy money. How would you structure it?
Let me put it this way. We are not somebody who would time the market or say that this is the bottom or the peak. We know this much that, what are the odds that the economy is likely to grow at 10-12% odd and the corporate earnings likely to rebound from single-digit numbers that we saw in the last 2 quarters. This quarter itself is a double-digit earnings growth number that's come for the first time in this financial year. We saw the growth numbers in the GST for 4 straight months was a single-digit growth. For January month has been a 12.4% growth, highest in this financial year. So, there are signs of bounce back in the economy and corporate earnings growth at a time when the price correction is possibly a little more than warranted. That's a good combination to have when you want to increase allocation to equities. Further beyond that, what should be the exact asset allocation? And that's where the investments need to be. That's what the advisors do. From our side, we are saying that these are the great opportunities to add up to the equity side.
Good conversation, Alok, and look forward to the next one. Thank you very much for joining us here on CNBC-TV18, and we'll spend all of our time next time talking about your views now that we have a fair sense of how you go about running the fund and running your portfolio. Thank you. Well, we'll get you some good news now, actually good news for us and good news for you. The numbers are out. CNBC-TV18's dominance continues as it knocks out the competition on the day of the Union Budget. India's watched Budget 2025 with CNBC-TV18. We are the clear number one with 91.9% viewership during FM's speech. In fact, India chose CNBC-TV18 as its budget destination overall, 88.4% viewership if you take the entire day, that is budget day. Thank you, viewers, for your consistent patronage, trust, and continued support.
Welcome back. We're closer to 23,000 as we begin the last half an hour of today's trading session. Mitesh is now back with us for a few BTST calls. Mitesh.
As you rightly said, we are closer to the lower end of the range. But any case, having said that, Reddington is something which is common radar. So it's not a BTST, it's more of a trading buy. I would want to buy here, accumulate more around 235, 236, and keep a stop at 230. I believe the stock can do about 265 in a good case scenario, to about 280 also. So that's another stock which in a corrective market is showing promising signs on the upside. So Reddington is one, and STBT on Colgate Palmolive with the stock just above levels of 24.87, 88, and a target of 24.50.
Reddington has actually also reported very strong numbers in the quarter gone by. Their cloud business was up close to about 42%, and overall revenue growth was much higher than what they've done in the past, and that's pushed up the stock. Thank you, Mitesh, for that. It's over to Vinny now. Natco Pharma is the accident of the day, now locked in a lower circuit of about 20%. Vinny, the negative word is Revlimid. That's what's hurting.
Absolutely, this week's set of numbers is only because Revlimid sales are not there in this quarter. There's a reduction in those sales, and we knew that they were going to be phasing out. But such a sharp fall is not something that one had anticipated, and weak numbers on that front is something that has impacted the overall performance in terms of revenue growth. That saw a decline of around 37% this time. Margin seeing a sharp contraction, a sharp fall versus last year, and that is also because Revlimid accounts to and gives higher margins versus other drugs and that they sell as well. So that is why a fall in terms of the margins as well. Export formulation business down 53%, domestic formulation business down 3% on a year-on-year basis, while the smaller part of the business, that's the API as well as CHS, that's the crop health sales, they have seen an increase year-on-year basis, but that's a very small portion of the company, and mainly Revlimid sales is the big reason why we're seeing such a sharp fall here.
Okay, and what about Suven Pharma?
So Suven Pharma, we've seen a good set of numbers that has actually come in from the company in Q3. Growth was led by the Pharma CDMO segment, which saw 101% growth on a year-on-year basis. The specialty chemical side of the business also saw a growth of around 22%, which is significantly better than versus what we saw in previous quarters. So recovery is something that they've started seeing coming in for this segment. API segment has done well, and margins has also seen an expansion led by the Pharma CDMO segment as well as the API segment, which leads to higher margins for the company. Management's highlight is coming in that strong growth is what they saw in Q3, and they expect this growth of 40% that they've seen during this quarter to continue because they want to achieve that sale of $1 billion company, that what they want to turn out to be by 2030. ADC segment of the company has been doing well. They expect to stay in this margin range of mid-30s going forward, as well as they're always looking for inorganic growth opportunities is the highlight coming in from the company. Do not forget this stock has seen a correction in the last 6 months, specifically from November. The stock is down 55%, and at that November level of high, we are seeing the peak PE over there was around 81 times. Currently, the stock is trading at 60 times the PE, so important to watch out for. But Suven Pharma, good set of numbers.
Okay, well, thank you very much, Vinny, for that. So lots of pharma stocks making big moves in a market at the index level, which is not really doing very much. Now, the big story, of course, is going to be tonight, right? And Parishit, my colleague, is in Washington, D.C. He caught up with Mukesh Aghi of the US-India Strategic Partnership Forum and asked him about bilateral relations under Trump and whether India will see reciprocal tariffs from the new administration there. Listen in.
India has maintained strategic autonomy in every aspect because it has to live with China on its border. But at the same time, China also has taken a position that it will never treat India as an equal partner. So India has to find its own position. Now, it does not mean that it's going to be 100% dependent on the United States. It will leverage that relationship. It's going to partner in a way that is win-win for both countries, but at the same time, do not sacrifice its autonomy vis-a-vis China itself. More important is, I think, the Trump team, from a geopolitical perspective, will try to leverage its partnership with India to put pressure on China. And it all depends how far India goes managing that also. The average tariff India has, even though after bringing it down, is down to 11%, whereas the average tariff of US is around 3%. So there is a gap. And I think there'll be a lot of pressure, especially on the goods which are being exported from the US into India to be brought down. I don't think there'll be pressure on the agriculture side because US protects its agriculture, so does India protects its agriculture. So it will be goods, especially I call the capital goods which are coming from the US into India. I think but the bigger picture would be I call market access and level playing field. It is important for US companies to explore India, to get access to the Indian market, but at the same time have a level playing field. And I think that's where the pressure points will come in.
Okay, interesting conversation there, but it's time now to find out what's happening in dealing rooms and what the buzz is over there. Nimesh?
Hi, Rima. So we've given up most of the early morning gains, but it's not an ugly looking screen. But again, the sense I'm getting is that the FIs are better sellers. When I mean they are more selling than buying even in today's market. But what is more interesting is, Rima, today for a change, there is a small basket buying in mid-cap names at a leading FI desk. So that's something which has changed in the last couple of days, a bit of buying interest especially after the kind of carnage we've seen in the broader market names today. So that's a bit of interesting feedback. From a sector point of view, there is still selling in the PSUs, and within that, OMCs are seeing a bit of selling pressure today. And the other pocket where there is selling is the financials. And within financials, it's very, very selective selling in the large private banks and some names is what I understand. So those two sectors stand out as far as the selling is concerned. Technically, again, the level of 22.800 is a very important level to watch out for. Market looks oversold, so there could be some pullbacks. But from a flow perspective, there is still FII selling from large institutions.
And stocks, Nimesh?
So in terms of individual names, the first stock is Bajaj Finserv. Actually, both the Bajaj twins are doing good today, both Bajaj Finance as well as Bajaj Finserv. But for Bajaj Finserv, for second day running, there is very aggressive buying from larger FIs. So it looks like some interest is back in those Bajaj twins from the larger institutions. So that's the first name. The second stock is PFC. Well, the stock is up in trade today, a bit of short covering as well, but there is selling pressure and very large selling is what I understand in PFC in today's market. So that's the second name. The third stock is a couple of gas stocks, Triveni Turbines, as well as Reliance Infra. Reliance Infra is quite interesting. After a long time, some bit of institutional interest seems to be back. As I said, there was a basket buying in some select mid-cap names. These two names stand out in terms of buying, from the larger FIs in cash stocks, and these are the two names. And the last one is Macrotech Developers. Again, a beaten down stock. Entire real estate package aggressively beaten down, and you're seeing a bit of pullback now. Oberoi is up today, and even in Macrotech, I understand there is delivery-based buying from large institutions today.
Got that. Nimesh, thank you very much for that. So that is the feedback which is coming through in terms of D Street chatter and individual names to keep an eye out on as always. Adani Enterprises, I think, is sold off. It's down about 4.5%. So from the highs, actually, it's quite a bit more. We have Ambrish Baliga now joining in. Ambrish, good to have you with us here. Thank you for your time. Let's just get the stock out of the way. The one name that you're recommending, I think it's Jyoti Laboratories. Tell us about it and why you like it.
See, it's a leading brand in home and personal care segments, including fabric care, household, insecticides, personal care, as well as dishwashing. Strong brands, Ujala, Henko, Maxo, Margo, Exo, and Prill. And it operates through 23 manufacturing facilities. They have more than 9,000 channel partners, and products are available across 28 lakh retail outlets across the country. Q3 earnings were a bit weak. Operating margins fell about 110 basis points. Volume increased by just about 4%. Basically, overall performance was affected, but then this was expected by the analysts. That's the reason we didn't see much of a major correction. But the management's primary focus for Q4 is going to be to protect margins, and they're quite confident about a double-digit growth for the next 4 years. So from that point of view, looking at the way the rural demand is expected to come back in a major way over the next 3 to 4 quarters, I'm expecting an EPS for FY26 of 11.5 and target price of 460.
Ambrish, if one has to buy a individual bank, a stock, which one would it be in the private sector bank? So Kotak Mahindra Bank, for instance, is only up 1.5%. One would have thought that the lifting of the RBI ban on credit cards is a big overhang, which is lifted.
Yeah, that's true. But then, we have not seen performance from Kotak for quite a while. Even before the ban, we had not really seen any performance from Kotak, at least a year before that. And in the last couple of days, we have seen some sort of an uptick, but this is not enough to really entice investors to come back and invest in Kotak in a big way. So as of now, I would possibly look at Kotak going to levels of about 2050, 2100. I don't really see it going too much beyond that. So from a big perspective in the private sector bank, I would possibly go with the fallen angels, if I can call that, possibly something like an IndusInd, which I had recommended last week, and something like a RBL Bank, which is slowly putting things in place so that the future quarters, at least we should see better numbers.
Okay, thank you very much for that. Do stay on, Ambrish. We just need to slip into a very short break. Before that, here is a quick programming note for all our viewers. CNBC-TV18 and HSBC India are back with Season 2 of the SME Champion Awards. This prestigious platform celebrates SMEs that are pushing boundaries, making an impact and shaping the future. Nominations are now open. Scan the QR code now and submit your entry for the SME Champion Awards Season 2. Welcome back. Like yesterday, it's going to be a flat closing on the markets, but not bereft of a lot of volatility that we saw intraday. The mid-cap index, at least for now, is at least managing a green tick as we come to the close of today's trading session. Remember, today was also the Nifty 50 weekly expiry, and that adds its own volatility. But let's get you some market opinion. Amish Shah, head of India research at BofA Securities, maintains his bearish stance, and he expects single-digit returns in 2025. According to him, mid and small caps remain expensive, and we can expect further downside.
I think this is a year where Nifty is likely to deliver only a single-digit return, which is more like making a fixed income kind of returns with equity risk, which is not something that we are getting excited about. Mid and small caps, we think, are still expensive, can continue to correct, and therefore one should expect even lower returns than Nifty, possibly even negative returns. So not in the bullish camp as yet. In the bearish camp on everything to do with capex, so not just industrials, but we are as a result also bearish on cement, steel, energy, power utilities, anything that concerns the capex cycle. We are currently positive on rate sensitive sectors, which is autos, real estate, some internet, some financials. And given that our views on markets are cautious, we are also defensively positioned in healthcare and telecom. The general assumption is that India is too small a trading partner from a US perspective, and as a result, there isn't likely to be too much damage, but that's a hope. Clearly, even the markets are not pricing in too much risk yet from anything going wrong in terms of those discussions. So from my perspective, actually, it's a neutral to a negative event for the market. As RBI is now saying that they will let the currency play its own role, they are only going to look at very large swings like the way we saw a couple of days back where RBI intervened again. But otherwise, we do think that rupee depreciates. 88.5 is currently our house view. From a near-term perspective, and the 9% overvalue valuation of rupee, we think will only close in gradually over a couple of years' time, not immediately. FII flow continues to stay weak, because just think about it that the 10-year bond yields in the US is about 4.5, 4.6%. That basically means that the hurdle rate of returns that you expect from emerging markets like India is about 15%, right? Because 4.5% you are getting risk-free dollar return. Add to that another 4-5% rupee depreciation that is widely expected. So that takes you to 9% rupee return, risk-free. And then you would expect 500-600 basis points of equity premium because of you wanting to take equity risk and not a safer asset like a bond. So 15% return, arguably, as I'm highlighting, 15% for the markets as a whole is difficult to justify. For some stocks, yes, but for the market as a whole, difficult to justify. Then why should why should the FII flows be positive India?
Okay, 15% is the hurdle rate that FIs would want if they are investing in risky assets, which includes emerging markets like India. Still in conversation with Ambarish, that conversation with Amish, we also spoke about industrials. And he said that out of the 14 industrials, he's got a negative view on 13 of them and only one neutral call. And despite many of the stocks being down 30-40%, he's saying it's not the time to get constructive. What is your view on stocks like in ABB, Siemens, L&T, Havells, etc.?
No, I mean, if you're talking of calendar year 2025, I think it'll be a difficult year for the markets overall. And you just see the last 3 years. Most of the portfolios have given a return of 30 to 40%, whereas if you look at the long-term average, it's about 16 to 18% on the higher side. So the excess which we have made in the last 3 or 4 years, has to get adjusted somewhere or the other. So I think this year would be a very difficult year. I'll not be surprised if it's going to be a negative year. But then people who are so used to instant gratification in the last 3-4 years, I think they'll be quite disappointed. And they would be the people who will actually create the panic in the market. And I think that is an opportunity for long-term investors, who are really looking for value investment, contrarian picks. I think it will be a great opportunity for such players in 2025. And in fact, I'm looking forward to that opportunity so that you can actually make good money over the next possibly foreseeable 2 to 3 years, because you really can't go wrong as far as India is concerned in the longer run. So keep the money bags ready. 2025 will be a year for all investments.
Yeah, no, absolutely. Any thoughts on, again, I mean, Swiggy, Zomato, etc., much discussed names. It's just that stocks are down 30-35% on an average from their highs, right?
Right.
Anything here? Swiggy is coming back a little bit today.
Yeah, I mean, see, like the industry or the sector these companies are in, you really can't say that the growth is going to slow down. I mean, we have seen the sort of a growth which have, like in the last couple of years. I think that's going to continue, maybe increase. I think the only issue with Swiggy is that post the IPO, I think the management has made certain comments which were positive for the stock at that point of time. And immediately post the results, we realized that most of, the comments were not really valid. So I think Swiggy would be one stock where I think people would possibly stay away, especially the serious investors. I think Zomato would be a stock to be looked at.
Zomato is a stock to be looked at. You know, Zepto's got to do an IPO sooner rather than later. At least essentially that's the buzz. The bet many are making is that they will reduce the discounts eventually. Zomato is the cheapest across, I mean, at least here in Mumbai. So they will reduce discounts and, it'll become more sane and everyone will make money. So that's I don't know if that's going to come true.
It sounds quite like telecom, right? That once there was disruption and then eventually there are three players, everyone needs to make money.
Everyone needs to make money. By the way, I heard Zepto perhaps is doing one more round, private round.
Okay. Before
is the IPO going to be even later then because they got more money to discount, etc.
But Hexaware is not seeing demand. Today is day 2 and I know most of the demand comes in towards the end, but I think it's 7-8% as of 1.5 day of subscription. So market mood has a role to play in that.
Absolutely. Well, 50 points lower, 23,018 is where we are at right now. And it's down just 50 odd points or so. Amrish, stay with us, just wrapping up things here. Nothing, 0.25% lower on the Nifty. Look at the Nifty Bank, which is down about 0.12%. The mid-cap index will come up and that is down about 0.14%. The small cap index is down. Small caps are down sharply. I mean, 0.75% lower on the small cap index. That, I think, out of the 4 that I mentioned, is sold off the most. Advanced decline, a little in favor of declines. 1,450 stocks are down, and you got about 1,350 stocks which are higher. Not very much. 100 stocks separating gainers and losers. But that's essentially what you have. Now, maybe just a quick look at what was down today. Mahindra was down 3.5. Actually, Mahindra in the last 3 days has come off from almost 3,300 to about just under 3,000 rupees now. 10% last 3 days from the highs of last 3 days back. So that's M&M for you. Adani Enterprises also sold off towards the end, and it came off sharply. Eicher Motors was down 3.5. Hero was down about 3.25%. I mean, actually, on the losing side, these 3 were amongst the top losers yesterday as well. M&M, Eicher, and Hero. And it's the same today. ITC, Infosys are some of the others. On the upside, Bajaj Finserv, actually financials had a pretty good day, even though it does not show up on the Nifty Bank. But Bajaj Finserv, Bajaj Finance, SBI Card, Kotak Bank, Shriram Finance, HDFC Life, outside of the index, something like a Chola Finance, which went up about 6% or so. So, a fair bit of action as far as the financials space is concerned. Of course, lots of movers in the form of Swiggy and Ashok Leyland for the second day running, and Honasa, which went up on earnings, KRN, Premier Energy, which both recent real listings and doing well today. Inox Wind, which was up about 6% or so. So enough and more action in the broader space. Well, it's a wrap on this edition of Closing Bell, but don't go anywhere. Markets Forward will pick up on all the action in just a bit.